Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City. And what I want to talk about today, again, as I always talk about, is what's going on with interest rates. Now, if I had the ultimate crystal ball, if I was a world-class economist, you would probably go, well, whatever Joe says has got to be right. Now, for me, I do follow trends. I do read a lot. I do watch it. I see historical data constantly being sent, and data is king in this particular respect. I work with the lenders every day of the week. I get rates updates at least once a week, if not twice a week. So what's happening right now is the only rate changes we're seeing is from some lenders that, because of Fannie Mae changes in investment loans, are quoting prices that are 0.5% or 1% more than other lenders. Now, I don't have really time to really get into this, but really depends on the portfolio these people have, depending on how large the organization is. It depends on how many investor loans they can do. And so I do have situations where I can get that standard investor interest rate without any problems. Now, inflation is something that people are kind of worried about all the time because the economy is getting better. Not getting better in a dramatic fashion, but it is improving. Jobs are out there. The lockdown is to a great extent over in the United States. Cases are dropping. And so people are concerned with this. But a lot of inflation is really, as I've seen, is in three areas. First of all, it's in housing because we have shortage of materials. And because of that, the demand is so great that prices are going up. Plus, a lot of things come from overseas in container ships from China and Vietnam and Japan and Korea. There's not enough container ships. There's not enough people working on the docks. And so there's shortages there, and it's causing what economists are saying is a temporary blip on that. Then also we look at the two things that are very, very volatile, which is energy and food. And we've seen energy really rock up and down quite a bit. It's still doing that, and it's up right now. But we have a movement towards clean energy. And again, that's going to make changes. If we take some of these things out, and we're already seeing lumber going down in price, by the way. After 400%, I sure hope it does increase in 1 year. But we're seeing that. We're seeing supply starting to ramp up a little bit. Federal Reserve is still doing their quantitative easing. They're still going to say, look, throughout this year, possibly into next year, we're going to keep buying treasuries and mortgage-backed securities to keep interest rates low. And especially with the trillions of dollars coming out of the federal government at this point, they want the federal government, to be able to borrow at the lowest possible interest rate. So there's still reason to believe that interest rates are going to stay low through this year. Now, here's the thing, even a 1% change in interest rate does change the market conditions. I've seen it throughout my whole career, throughout my whole first time I've ever bought a home, and also my 32-year real estate career. That does change things. So we do expect, and I've seen something from the Mortgage Bankers Association, I do have a chart saying what's going to happen by the end of next year. Now that's far down the road, I know that. So if you're in the market right now, you're, I think, in pretty darn good position. We see nothing at this point on the horizon that's going to really roil up the interest rates. It's a good time for you if you can find a home at a good value for you to do things. I'm seeing interest rates staying low until I'm proven wrong. We're staying the course that we've had for the last year in interest rates staying down.